Trading with trends in the market can not only add accuracy to a trading strategy, but can also add to the risk-reward ratio of that same strategy, overall increasing the profit potential of any strategy you use. So in today's video, what I'm going to do is share with you guys the top 3 ways I've used in my own personal trading to actually identify trend. And towards the end of the video, we'll be talking about a simple strategy that can be used to take advantage of trend trading using one of the ways of identifying trend we're going to discuss in this video. So if you're new here to the trading channel and you enjoy free educational content about Forex, then you need to do 2 different things. One, go ahead and click that subscribe button and the notification bell. And since YouTube takes a little while to actually send you notifications about these videos, if you'd like to be alerted first, then you can head over to thetradingchannel.net and sign up for our email list. Doing so will also get you a free beginner's course to technical analysis and other free material we don't offer here on YouTube. The link for that's in the description. I'm going to go ahead and let the intro and disclaimer roll while you do that. Click that like button for us, and I'll see you guys on the other side. Welcome back, guys. Let's go ahead and get started with the top 3 ways that I've used in my own personal trading to identify trend. We're going to start out with the most simple way I've found to identify trend. It's the most simple and by far the most non-subjective. And what I mean by that is that it's very, very easy to identify when it comes to this way of identifying trend, and that is using 2 different moving averages. So for me, the 2 that I found worked best in my own personal trading was the 200-day moving average and the 100-day moving average. The red line being the 200-day and the blue line being the 100-day moving average. Now, with this being the case, the reason this is so non-subjective and frankly hard to mess up is because all you're looking for is your 100-day moving average to be below or above your 200-day moving average in order to identify this market as in an up or a down trend. Now, a lot of people, whenever they consider moving averages in trading, think about crossover strategies and actually placing trades based around a moving average. That's not at all what I'm talking about. That's, in my opinion, not a very good way to trade because of how these indicators lag. Moving averages are going to be a lagging indicator, and these are going to be lagging even when it comes to identifying trend. But when it comes to an easy, non-subjective way to look at the market and identify it as either in an uptrend or a downtrend, these moving averages can work really well, especially for beginner traders that have trouble identifying market trends using only market structure. So crossovers would be something like this. This is a moving average crossover, and I'm not talking about trading when the market crosses over. As I said, to me, that's not a very intelligent entry reason. But what I'm talking about is waiting on that cross of those moving averages to identify the market afterwards as downtrend. As soon as this cross happens, what you can do is say after the cross, if my 100-day moving average, the blue line, is below my 200-day moving average, 100 below the 200, then I only look for short trades using my specific entry reason. And I'm not sure what your entry reason may be. Again, towards the end of the video, we'll go over a simple strategy you can use with some of these ways of identifying trend in order to capture some trend continuation. But that's how you would use this specific way of identifying trend in order to trade in the markets. And as simple as this sounds, guys, it would add a ridiculous amount of accuracy to most of your trades if you're someone new or that doesn't really understand market trends and market structure and you're trying to trade with a blank chart. Again, I'm not a huge fan of indicators on a chart, especially now in the later stages of my trading. I trade based on mostly price action and structure. But I was able to come up with profitable strategies using this as trend identification in my earlier years of trading. So I wanted to share this with you guys for those of you who are in the beginner to intermediate level of trading and you still have trouble identifying trend using structure. And it's not even the fact that you have a difficult time identifying trend using structure. Maybe you just see it as a little bit too subjective and you can't come up with the perfect set of rules in order to do that. If you look at a chart and you can't automatically tell what trend it's in, then you probably need to try to find a new way to identify trend for now until you get a little better at identifying market structure and identifying market trends. So again, just a quick recap on how we would use 2 different moving averages, and it really doesn't matter what the moving averages are. When it comes to the numbers, you can use a 50 and 100, you can use a 20 and a 50. As long as one is smaller than the other one, this will work. But for me, the 100-day and the 200-day exponential moving average is what I chose to use in this scenario. And as you can see, while the blue line is above our red line, what we're looking for is long trades, looking for the market to continue that trend in the upward direction. And while the blue line, here's our cross, is below our red line, we're looking for short trades in a continuation of a downtrend. So that's our first and most simple way of identifying trend that I've used in my own personal trading. Now we're going to take a look at a different way of identifying trend, still using a moving average. But instead of having two moving averages on the screen, what we're going to do is just take off the 100-day moving average. And this is going to be the second most simple way to identify market trends. And in this case, instead of waiting on the moving average cross, if you'll remember, that moving average cross happened right in here. So this way of identifying trend, although a bit more complicated and subjective than using a moving average cross to identify trend, this way will give you a faster trend identification. As you can tell, the market breaks below the 200-day moving average back here, whereas this is where our downtrend started when using the moving average cross. So this gives you a little bit of a faster signal, but it can also be a bit more subjective because you don't want to be trading trend continuation while the market is consolidating. And in this area, these consolidation areas can be extremely tricky to find when using just one moving average in order to identify trend. For me, the moving average that I used when only using one moving average has varied between the 20, 100, and 200-day moving averages. For this example, we're going to use the 200. What I would do is just test strategies with each of those, being your trend identification, if you'd like to use this non-subjective way of identifying trend, and see which one works best for you. So using just one moving average to identify trends is an extremely simple process. For me, all I'm doing is looking for, is price action above the moving average or below the moving average? And when the moving average is going sideways like this, choosing not to trade. When price action is touching and bouncing off of the moving average multiple times, that's when I stay out of the market when using this way of identifying trend. Stay out of the market at least for trend continuation trades. For counter trend trades, such as advanced patterns and other things, this type of market right in here works really well. But today we're talking about trend continuation trades. So in that case, what I'd be looking for is this moving average to be moving up or down, price action to be above or below it, and then looking for entry reasons based on that trend identification. In the case of above, we'd be looking for only long trades. In the case of below, we'd be looking for only short trades. So now, guys, we'll go ahead and move on to the third way of identifying trend, which is going to be the most complicated to understand and learn. But for me, in my own personal trading, it is also proven to be the most profitable. And guys, if you're still really confused about identifying trend structure and what entry reasons to use based around these things, then we do have a full training course over at thetradingchannel.net called the EAP Training Program that goes over structure analysis, it goes over strategies, entry reasons, and pretty much lays out a step-by-step process to creating an entire profitable trading plan. And in this training course, we give you a step-by-step process to do that. So if you want to skip the terrible learning curve of trying to figure all of this out on your own, then feel free to click the link in the description labeled EAP Training Program. Otherwise, we'll go ahead and continue with the video and talk about the final way of identifying trend, which is going to be using only price action. And as I said, this can be extremely tricky. It can also be much more subjective. So it's very important to have very, very specific rules when identifying trend using only price action. The rule that I use is called the break and close below and above rule. What I'm looking for in this case is for a market to create a low, then a lower high, followed by a break and close below that previous low. And in order for the trend to be a continuation of the trend, I continue to look for the same thing over and over. So at this point, lower high, then looking for a low that breaks below and closes below this low here. Let's move the chart sideways and see if that happens. So yes, here we would still be considered in a downtrend because we've had this low be broken and closed below after a lower high. Then we had this low that was broken and closed below after a lower high. What we're expecting now is a continuation of that trend, a lower high followed by a break and close below this previous low. And this is the way you would identify trend using only price action, using only structure. This definitely gives the fastest signals of a possible reversal, gives the fastest signals of trend continuation, and is proven to be one of the more profitable ways for me to identify trend in my own personal trading. Now, we talked earlier about signing up for the email list if you want to receive faster alerts about when we come out with these videos. But another thing that's included in that is that free technical analysis beginner course. In that course, we go over the specific rules that I use in order to actually identify trend using structure. So if you're someone who's struggling with that, then that course is absolutely free. You can get that course by going over to www.thetradingchannel.net and signing up for our email list. So now that we've talked about a few different ways of identifying trend, what we're going to do is actually go over some strategy creation using one of these ways of identifying trends. So let's go ahead, head to a different chart just to change things up a little bit and keep it interesting. And I'll talk you guys through strategy creation and actually go over a very simple strategy with you using one of these ways of identifying trend. So let's go ahead and get started with the simple strategy that we're going to use in today's video. And we're going to take a look at some examples of this strategy here on the Euro-Yen 1 hour chart. But before we do that, let's go ahead and go to a whiteboard and actually discuss what this strategy is going to be. So what we're going to be looking for today in this strategy that we're going to create is price action to be below the 200-day moving average or above the 200-day moving average. That's going to be our condition that we need met. And for an entry reason, we're going to use something extremely simple. We're just going to use double tops and double bottom entry reasons. This is something that every trader that's watching this video has probably either heard of or knows how to trade really well. So what we'll be looking for is price action to fall below that moving average, pull back, and then create some type of double top situation before pushing back above the 200-day moving average. And although this sounds extremely simple, what you'll come to find throughout your trading career is that sometimes the more complicated the strategy does not mean the more profit it will make. Most of the time, the more complicated the strategy only means the harder it will be to follow. And this specific strategy is not something that I've tested thousands of trades in the market, but it's just using common sense in order to create rules and in order to create a strategy around the trend identification methods that we've talked about in this video. And you would be surprised at how far common sense can actually take you when it comes to creating profitable trading strategies. So just a quick recap of what we're going to be looking for on that Euro-Yen 1 hour chart. We're going to be looking for the market to be under or over the 200-day moving average. While the market is in that specific condition, we're going to be looking for double tops and double bottoms that meet our rules for double tops and double bottoms. And now let's go ahead and delete all this and actually talk about our rules for double tops and double bottoms. So in order to classify something as a double top, what we're going to look for is a market that's pushing up. We have our first top here, a pullback. We need at least 2 to 3 candles on this pullback, can be more, but cannot be less than 2 or 3. And then we need a push up. And we need this next candle, the next top, the close of this top, to not close higher than the previous wick, because that will signal trend continuation. But we need the wick of this candle. We delete this candle and redraw it for you guys. We need the wick of this candle to at least touch the top of the body of the first top. So what that would look like is we need something like this, where the wick of the second top is at least touching the body of the first top, or we need something like this, where the body of that second top does not close above the previous candle wick of the first top. This is going to classify a valid double top entry for us, and the opposite of that is true for a double bottom entry. Let's go over that really quickly. Be looking for a market moving down. Our first bottom here. Push up of at least 2 to 3 candles, couldn't be more. And this second bottom, 1, the wick of this second bottom must touch the bottom of the body of the first bottom in our double bottom scenario. And the other way we classify this as a valid double bottom is if the entire candle comes down, but the body does not close below the previous wick, which is right here of the first bottom. So either one of those scenarios is going to make this a valid double bottom and double top trade. And that's exactly what we're going to be looking for here on the Euro-Yen chart. So remember, looking at the chart, we want the market to be above or below this 200-day moving average, and we want to see double bottom and double top scenarios in that market condition. I already see one that we have right here. We have an uptrend. We have our scenario met. The market is above our 200-day moving average. This uptrend pulls back into this first bottom right here. And then we get a second bottom right there. This is a double bottom above the 200-day moving average. Of course, this trade did not work out very well, but it's important to point those out as well, because it's not going to be a situation where you win every trade. That really doesn't exist in trading. What you're going to notice throughout your trading career is that you're going to have wins and losses no matter what strategy you find. So let's go ahead and spot some more of these. Here we have a nice double top scenario. We have a market that is below our 200-day moving average. Pushes up, creates this high right in here, pushes back down to our neckline, more than 2 or 3 candles, then pushes back up to the second top before pushing down. Entry would be right at the close of that green candle. Stop loss up here above our swing high. Target down at previous structure lows. Now we're going to be looking at just the right edge of the chart during this little small portion of a back test. So let's continue looking for that scenario. Here we have another one. We have market push down into new lows, breaking below our previous lows, pushing up to our first top, back down to the neckline, and then this wick did touch the top of the previous body here, giving us a valid double top entry here. The valid entry would be on the close of this candle, stop loss above the previous swing high, target down here at the previous lows. Continuing to look for this, we're still in our correct condition, which is under the 200-day moving average. As long as we stay in that condition, we can continue to look for these double top scenarios. So let's keep this going. First top here, let's see if we get a retest. We did not. Continuation in this downtrend. First top here, let's see if we get a retest there. We do. We would be short right there according to the strategy on our double top here, still below the 200-day moving average. Stops would have been up here, so we would not have got stopped out. Targets back down here. Let's see if we actually come down to hit those targets. And yes, we would have hit those targets there. Now continuing to look for a double top scenario. We have one top here. Let's see if we get a retest of that top. No, we did not. And now we're here at current price action. So there was a look at some strategy development using a simple method of identifying trend and combining that with a very simple price action pattern that everyone watching this video more than likely knows about. And of course, you can add multiple different conditions to this, such as RSI being overbought and oversold, RSI divergence, if you're familiar with those types of things, and many other conditions and entry reasons that you can use for this. I just wanted to give you guys a very brief and simple example of how to develop a strategy using some very simple trend identification methods. So with that, I'm going to go ahead and end today's video. I really appreciate you watching it until the end. If you did, then don't forget to hit that like button if you found value in this tutorial. And remember, if you're struggling trying to find a way to become profitable, even after viewing a lot of free educational content here on YouTube, then we do have organized courses and programs that teach you the step-by-step process to actually becoming profitable. And these courses and programs over the last couple of years have helped hundreds of traders on their own path to becoming profitable. I'll put a few of their testimonials on the screen, and I'll just tell you guys that it's going to be extremely difficult, even with all the great free education that's out there, for you to become a consistently profitable trader without taking some type of training. And I'm not sitting here saying that you're doomed if you don't buy our training course. That's not what I mean at all. I'm just saying you need to find a way to educate yourself, because becoming a profitable trader without having some type of education is nearly impossible. That would be similar to trying to become a doctor or a mechanical engineer without going to school to be trained in those subjects. So if you're at that point in your trading and you're ready to invest in your education and take your trading to the next level, we have some more advanced training on strategies we use, on entry reasons that are included in the EAP Training Program. That program also comes with something called email analysis. These are email alerts whenever we actually place trades, not to be used as a signal service, but to be used to help you better understand how I view the market on a daily basis and better understand the strategies and entry reasons you learn in the EAP Training course. Also included in the course is an entire backtesting course, review videos at the end of each week to show you guys the profits we've made, along with the drawdowns we're going through to help you with discipline, a risk management course, and much more. Again, it is laid out in a step-by-step process to get you from where you are to treating your trading as a business. So if that sounds interesting to you, then you just click the link in the description to learn more. Clicking that link does not mean you're tied into anything. It'll just take you to a page that explains a little more about that program. If not, that's okay too. Make sure you're subscribed here to stay alerted whenever we come out with new free educational content about Forex trading. Again, if you found this video valuable, please go ahead and click that like button for me. It really helps out the channel. I wish you guys the best of luck on all your future trades, and I'll see you guys on Monday for our weekly market predictions video.